Okay, good evening, everyone. All right, welcome all of you to join our webinar tonight. So, okay, my name is Abigail, and I am your host tonight. So, I hope all of you had your dinner and ready to learn as much as you can tonight. All right, so let us just start our webinar. Okay, so this is just a little disclaimer. Okay, yeah, whatever we share tonight is just for general information and educational purposes. So it does not constitute any recommendation to buy or sell any investment products. Just let me do a quick sound check to see if everybody can hear me. Yeah, so maybe you can just put in the poll if you can hear me. Okay, I see some responses. You can hear me. Okay, that's good. All right, so let's continue. Okay, so yeah, this is just a little bit about our company. So our company is called Philip Capital Sdn Bhd. So we are incorporated in the year 1995, and our company has been around for close to 30 years. Yeah, so we are wholly owned subsidiary of the Philip Capital Holdings, and we were also formerly known as the Philip Futures Sdn Bhd. But as we grew and expanded our services and product offerings, we have since renamed as Philip Capital. So apart from that, we are also a trading participant of the Bursa Malaysia derivatives, participating organization of the Bursa Malaysia securities, and also a holder of the capital market services license. They are a mouthful, but basically it just means that we are a legal, licensed, and regulated broker in Malaysia. Okay, so Philip Capital has offices across Malaysia. Our mother company is actually from Singapore, but our headquarters is based in KL, Kuala Lumpur. So we have 11 branches in total for both East and West Malaysia, as you can see here. Okay, our office are called the Philip Investor Centers lah. So if you are from any of these cities, you are also welcome to drop by our branches to inquire about investment-related services. Yes, and we are honored to have received the Bursa Excellence Awards for the past many years. So last year, we have been awarded as the first runner-up for the best retail derivatives trading participant, and also the second runner-up for the best overall derivatives trading participant. So we will continue to upgrade and provide the best that we can to serve our clients better. Okay, so Philip Capital has a wide global network. So we have offices in 15 different countries as located here in the map. So as such, we also serve an international client base. And yeah, for our futures trading, we also provide products listed in global exchanges as per listed here. Okay, so we have exchanges from the US, like the CME, CBOT, COMEX, NYMEX. All right, we also have exchanges in Europe, Japan, Hong Kong, Singapore, and of course in Malaysia as well. So with our global coverage, right, clients can trade both local and foreign products within the same platform. Okay. Onto our products now. So we mainly offer 3 categories. So the first one is futures, okay, so which include like diverse markets, like the equity index, right? The agricultural, metal, energy, and also interest rate futures. The next one will be equities. You can trade Malaysia shares, US shares, Hong Kong, Singapore, and as well as Australia shares with us. And apart from just shares, you can also trade ETFs, warrants, and also IPOs with Philip Capital, right? And the third one is contract for difference, or also known as CFDs. So we offer local Bursa shares and US share CFDs. But if you are interested to trade the 3 main US indexes, we also offer the CFD at a very attractive rate. So you may ask like, oh, you have so many products to choose from, which one is more suitable for you? So if you are someone who likes to hedge, right, or take advantage when the market is going down or not performing so well, okay, derivatives products like the futures and also CFDs are a great choice because you can actually short the markets and still make a profit. So essentially, with derivatives, right, you can trade both ways when the markets go up or when the markets go down. All right. And you are also able to trade with leverage, right? Meaning your capital upfront is a lot lesser. Okay, but if you are more of an investor, you plan to invest like for the long term or collect dividends, then of course stocks are suitable for you to explore. Our rates for the foreign stock markets are actually very competitive. So if you're ever interested, do let us know and we can contact you accordingly. Yeah. Okay, so why choose us as your broker? So first, Phillip Capital is an award-winning and also a multi-asset broker. We are well established and also recognized in the market. And secondly, we also offer 24-hour broking and execution support. If you have issues regarding your trades and accounts, right, you can call in our dealing desk 24/5 lah. Okay, then we have dealers ready to assist you. And we also provide advisory services on like what kind of products you want to trade or how you can get started, especially for our new joiners. Okay. Next, we will send out the latest market news to our clients on a daily basis, so you can be sure to get the latest updates as well. And as I mentioned earlier, our clients can trade like a wide array of products through our platform. And lastly, we have the online account opening, which is very convenient for you to open an account and start trading with us. Okay, and apart from that, we also provide free one-to-one coaching, and also we often conduct free webinars and seminars like the one tonight. Okay, and then for the free the coaching sessions, they're actually more tailored for beginners who wants to get some guidance, right, on the introduction to future stocks or CFDs trading, or some they would like to know about like the platform, like so we can also arrange a platform coaching for you. Okay, so anything you can just drop us an email, right, or a message, right, to arrange an appointment so we can do this coaching for you to guide you. Okay, at Phillip Capital, we are also constantly providing educational resources for investors. So you can check out our upcoming seminars and also webinars by scanning this QR code. So we invite speakers from the industry to give market updates, insights. So it's very good opportunity for traders and investors. So yeah, definitely feel free to join us for our upcoming events. Yeah. Okay, this is the weekly market call, mainly actually for those who trade stocks, right? We conduct this. So you can join our research team, right, as they share their market views and also updates for the newly published reports. This is on every Monday, 11:15 a.m. Okay, or if you want to learn like technical analysis, right, how to spot entries or exits, right, then this is for you, the live counter technical analysis. So it will be on every Monday at PM. So yeah, you can just scan this QR code. All right, these calls will be done over on the Zoom lah, online. Yeah. And yeah, this is our, as I mentioned earlier, we have online account opening. So this is the site. All right, this is the QR code. So you can open the stocks, futures, or CFD account here. All right, it's very simple lah. Basically, just probably take you 10 minutes. So maybe some of the documents that you require will be like your bank statement, your IC. All right, you have to submit them online. And yeah, it's actually pretty easy lah. But if you need any help to navigate it or how to, get some assistance, you can always look for us or drop us an inquiry as well. Yeah. All right, now onto our trading platforms. So first one, the platform we use for futures trading is called the Phillip Nova. So it is a web-based platform and is actually very simple to use. So we also have this mobile app on Apple and also Android devices that you can download to use. All right, our platform is actually equipped with a wide range of technical indicators, live charts, market depth function, and you can get access to both local and foreign products just in one platform here. So if you're not a client yet, right, and you want to try out our platform, then you can, we have a demo account for you. Like you can scan and try out and see the interface, right? For this is futures trading. Yeah. Then the next one will be the stocks trading. So this platform we use is called the Poem Global 2.0. So it is an upgrade version from our previous one. So our platform offers advanced trading tools such as the technical analysis charts, stock analytics, news, and also analyst commentaries all inside this platform. We also have customizable alerts that provide users with an edge in making informed investment decisions. So it's suitable for new and experienced investors. And lastly, if you want to trade the share CFDs, then this is the platform that we will be using called the Philip CFD Trader. So yeah, this is basically how it looks like. You can customize the layout, see the charts, price, quotes, and positions all in one screen. It's also very easy to manage your trading. All right, so that is all for our trading platform. And next, we'll be on to our promotions. So currently we have a few promotions running. So the first one is called the Trade and Earn with Philip. So you can stand a chance to win exciting prizes like iPad, AirPods, and Apple Watch, as well as up to 1,800 ringgit of this Touch and Go reload pin. It's an e-wallet lah. So if you trade any products with us, so you can trade futures, stocks, or CFDs. So of course, the more you trade, right, the more rewards you are likely to win. So yeah, this promo will run till the end of this year. So yeah, if you are interested to join, yeah, you can definitely participate in this promotion. So the next one is the foreign stocks fiesta. So it's based only for the foreign stocks. So if you invest in either the US, Singapore, or Hong Kong markets, you can participate in this promotion. You can also get a welcome reward of up to 20 ringgit Touch and Go reload pin when you open and fund your stocks account. And then additionally, you can also get rewards when you start trading in these 3 markets. But this promo should be ending very soon. But do stay tuned because we will have more promotions coming. Okay, so before we dive into our topic tonight, let me introduce you to our speaker, Jeen Hao. So he is the founder and also the chief master trainer of Street Finance. So Jeen Hao started his investing journey in the capital market since I think a fairly young age, like just 19 years old. And and with his expertise and also experience over the years, I think he's able to teach trading in the futures and also stocks market through the program that he actually offers. So this webinar tonight is actually the second webinar in a 3-part series on stocks trading that we are actually doing. So those who joined the first webinar, you know that Jeen Hao is really just dropping gems, right? So I'll give you a little bit of recap okay. The first webinar he shared on how to be your own portfolio manager. So he taught you how to master your risk management, including understanding R multiples and also adopting portfolio management techniques. So today he will be taking your investment journey further by sharing with us the behaviors in investing and trading. So he will also talk on how we can combine strategies to make the most profitable decisions. So when Jeen Hao is sharing, you all can actually just drop all your questions in the chat box along the way if you have any, because at the end of the session we will have a Q&A where Jeen Hao will answer all your questions. So without further ado, right, let's just welcome Jeen Hao tonight.
Hello.
Yeah.
Can you hear my voice right?
Can.
Okay, cool. So you need to pass the... Okay, great.
Right.
Okay, so right now sharing my second screen. All right, okay, so I think can see right at your end.
Can see you and the slides.
Okay, cool. All right, so thank you, Abigail, for the introduction, and welcome everyone to tonight's webinar brought to you by Philip Capital. First of all, thank you, Philip, for having me here today to share with you the behaviors in investing and also trading. Now, this is actually a very important thing, okay, in my opinion, is because trading or investing is often 60% psychology, 30% risk and money management, and 10% strategies. A lot of people, when we get into the market, we are obsessed with techniques and strategies. Every time people look at the trades I make, people look at stocks I buy, then people will say, what strategy you use? Do you use EMA 10 or EMA 15? Why you use 10 over 15? Okay, but not a lot of people actually realize that, okay, psychology actually play a huge part, okay, as far as trading and investing is concerned. So 30% of your trading and investing success is actually based off your risk and money management. You got to make friends with risk, okay? And also, when there is risk management, then only we can talk about profits. So that's what I have addressed in the first part of this three-part seminar. And today we purely talk a little bit about psychology, because there are lots of things as far as psychology and emotion is concerned. Today we are just a baby step in it. Okay, so the next webinar, which will be held next month, brought to you by Philip as well, that's the third part, will deep dive into the strategy part. So tonight we talk about behaviors. Okay, so can you guys type in the chat box, okay, on a scale of 1 to 10, how do you rate your experience, okay, in the market? So how long have you been investing or trading? Can you actually type something in the chat? Let me see if I can see. Okay, so 1 is being like complete newbie, and 10 is like you have been investing or trading in the market for like more than 5 years. Okay, then you drop a 10 or 9 in the chat box. Okay, so can you guys actually type something? Let me just check if. Okay, because this is not the normal Zoom. Okay, but it's okay, never mind.
The question tab there. Think you can see it from there. Yeah.
Okay, because my question is empty. Oh, question is something, but there is nothing in the chat. Okay, I understand that. All right, all right. Okay, never mind. Hey, it's okay. Okay, so that's basically, okay, back to the topic for tonight. It's all about behaviors in trading and investing. Okay, so behaviors is something that we need to respect ourselves. Okay, that's how I feel when I face losses, or that's what I feel when I face profit. Okay, so that's what we need to fine tune down the road. Okay, so let's just move on to the next one. Okay, let me just disable my webcam because I realize it's a bit laggy. Okay, so again, whatever I say tonight is going to be purely for educational purpose only. Okay, so no buy call, no sell call. Okay, if I happen to mention some stocks. All right, so let's just quickly go through. Okay, this is me. All right, so these are the things that we'll be covering tonight. First, 4 types of behavior in the market. So if we were to sum up, okay, every person's reactions towards profit and loss, okay, then we can draw out these 4 types of behavior in the market. Okay, they are bad about it, they are good about it. Okay, so later we'll dive into this. And the second thing that we will emphasize is the risk reward ratio versus the winning rate, because the way you respond towards your profit and loss, okay, it has a very huge relationship, a very close relationship towards your risk metrics. Okay. Now the third one is, how can you take corrective action one step at a time if you think you need to take some corrective action? Okay. And also, how can you, okay, get into the most profitable combination, and how can you get there with proven strategies? Okay. Of course, the strategies part we will deep dive in the next webinar. Okay, but this one I will tell you what's the strategy first. You can go home. Okay, you don't have to trust me. Okay, do your own research. Okay, but don't discount anything what I say. You feel free not to believe what I say, but please don't discount what I say. Okay, go and do your research and findings. Okay, so there are 4 types of behaviors in the market, and these are being plotted based on your reaction towards profit and loss. Okay, do you always take profit when you have a little profit, or you tend to wait until the profit grows a little bit bigger? All right, and also when you look at loss, do you tend to cut losses very fast, okay, or very you drag very long and then it becomes big loss. Okay, so in super layman term, big profit or small profit, big loss or small loss, and then you can formulate these 4 quadrants. Okay, you can formulate out these 4 quadrants. So let us deep dive into these 4 types of behavior. So the first type would be the one in the red, okay, whereby you have big loss. That's why it is very far, okay, very towards the right side of the x-axis, okay, because you have huge loss. But the profit is little. That's why it is at the bottom. Okay, so let me just repeat myself. Okay, so this is small to big. This is small to big. Okay, small to big. So this quadrant is you have big loss, okay, and small profit. Okay, so that is what we are talking about in this particular slide, in this particular quadrant. Okay, so small profit, big loss. So this is where the most retail traders are. They hold on losses and take profit too quickly. Okay, this is, I would say, typical retailers. Okay, typical retailers. It is like when I first get into the stock market, okay, when I make, 5% in a month for one particular stock. And then because that time my relative asked me, hey, I heard you do stocks, you play around with stocks. And I actually dislike people talk to me, hey, you play stock, is it? Okay, to me it's not player. Okay, so, and that's the thing, okay? When I show my relative, I made 5% off a stock in less than a month, okay? And her reaction was like, why you are not selling it? 1 month, 5%. Why you're so greedy? Okay, why you're so greedy? FD, 1 year only 3%. Now you 1 month, 5%, you still hold. You want to wait, blah, 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 blah. Okay, there goes the debate. Because most retailers are people, they take profits like, oh, if the stock go up 3% in 1 month, then they quickly close it. But they can hold a stock like 30% loss and they're still not closing it. So if you try to think about it, this is where the most retail investors and traders are. Okay, this is where the most retailers and traders are. Now, if you're in this quadrant, you have to rely on super high win rate to stay profitable, which is often unrealistic, especially if you're in the stock market. Okay, now, it also highly depends on when you are trading it or investing in it. Of course, if you are going to bring back the time to 2020 post-COVID crash, you're going to have high win rate anyway. But right now in the market, win rate is basically out of the window, okay? Because the market is really not in a good shape. So this is something that we need to know, okay? Our win rate also highly correlated with the market condition, okay? Now, and most people who behave so are not profitable, and therefore, okay, corrective action has to be done to move to other quadrants. Okay, so how can you move? It's either you learn how to cut losses faster so that your big loss becomes smaller loss, or you learn how to let profit runs, meaning that you learn some kind of trailing stop strategies and things along those lines. Okay, so most traders, retailers, I would say, they are here. So that's why you need to take corrective action. This is the only one that, you need to really think about it. Now, if your current strategy or your current trading result, every time you lose money, you lose 2,000 ringgit. And then when you make money, you make 500 ringgit, 1,000 ringgit. Every time you lose 2,000, 2,005, 3,000. Then you make money, you make 1,000, 1,005. Something wrong because you are in this quadrant. Okay? If you are in this quadrant, fear not. Here are the ways that you can improve it. And I'll share with you step by step. Of course, you have to take things one step at a time. So let's talk about the next quadrant first. Okay, which is the one towards the left. Okay, here you have small loss, small profit. Okay, small loss, small profit. So this one, you rely on high win rate to stay profitable. Okay, high win rate, but not the kind that we are talking about just now, whereby you need unrealistically high win rate. Okay, so in people who are in this quadrant, they are often, okay, trading very frequently, okay, because if you need to have huge growth, okay, then you need to trade very frequently, because every time you win a bit. Every time you lose, you also lose a bit. So your small wins have to compound in order to give you a significant amount of return. So if you are into contra trading, which I don't recommend, but if you are into futures, let's say you trade our FPM, our FKLI or FCPO, okay, then let's say you might have a strategy whereby you have, 15 points of stop loss for FCPO, then you take profit at 15 points or 20 points. So your risk reward is close to 1-to-1, which is small. Okay, which is small for the amount we are talking about. Okay, so this is what I call small profit, small loss. Okay, or some people who like to trade stocks, 50-cent stocks. Okay, if it drops to 48 cents, he cut loss, but if it grows to 52 cents, then they take profit. So if you're under this category, you will only be profitable over the long run if your win rate is very high. Once you screw up your win rate, you're not profitable anymore, and you need to trade very frequently. Okay, so if you're in this quadrant, you will know it. You yourself will know it, because you are very busy in trading. Okay, you are very busy in trading. So people who behave so are probably you are a scalper, you are a day trader, or any kind of short-term traders. Okay, and once your win rate is negatively affected, they quickly become not profitable. Okay, and there is also one downside for people who are in this quadrant. You're gonna pay huge commission in the long run. Okay, you're gonna pay huge commission in the long run. If you are profitable in this quadrant, okay, then your broker will love you a lot. Okay, because you will still keep trading, but you also keep generating revenue for them, so they will love you. Okay, so that's the thing, okay. So brokers will love you. Okay, but you have to be very careful. Okay, once your win rate is screw up, then you are not profitable. All right, so the next is we talk about big profit and big loss, which is the opposite direction of small profit, small loss. So what are the characteristics of this people in this quadrant? So first one, you also rely on high win rate to stay profitable over the long run. Okay, same thing, because your risk reward is almost 1-to-1. Okay, so next is your holding power is usually very strong, and people who are in this quadrant usually have strong conviction or high convictions towards the stocks that they are holding. They have strong opinion about the stock. Okay, it's like some people are holding banking stocks, some people are holding, blue chip stocks. Okay, they can withstand unrealized loss of 20%, for example. But they can also wait until the stock really grows from, let's say, 10 ringgit to 12, 13, 14 ringgit. Okay, so these are the people who really have, respectable level of patience and conviction towards the stocks that they are holding. Granted, they know how to cut loss. Okay, if they don't know how to cut loss, they will quickly fall into the first quadrant that I mentioned just now, which I labeled in red. Okay, so people who behave so are probably investors most of the time, because only investors will hold such a high level of unrealized gain. Okay, they can hold a stock that they have conviction with from, let's say, 4 ringgit to 3 ringgit, and they're still not dumping the shares. Okay, or they are the directors. Okay, either one. Okay, so these are usually people who are investors and things like that. And last time, like stocks like Tesla, okay, whereby it went through like its downtrend moment, and there are a lot of investors who have strong conviction towards this stock. Okay, they really believe that Elon Musk will bring the company to the next level, and then they keep holding. Okay, so that's the type of people. Okay, and the profit taking and stop loss okay, levels are usually vary, okay, and inconsistent. So it's not like Tesla that can hold a 40% loss, but it doesn't mean that when they invest other shares, let's say, I don't know, like Plantel or whatever thing, they can hold 40% loss. Maybe they hold even more because Plantel is a lower price stock. Okay, so it will result, the results will take time and often unpredictable. Another thing is because the holding period is long. Okay, I have met people who are in this quadrant and they don't even know they are profitable. Okay, because they can hold a stock for 3 years. Okay, they can hold the stock for 3 years. So in order to gather a sample size of, let's say, 50 transactions, you will need like 10 years. Okay, so this is also one thing that I would say this is a blind spot of a lot of investors. Okay, this is a blind spot. When I ask an investor, what's your average return? They cannot answer this question. Okay, so it can be a little bit inconsistent sometimes. Okay, so the last one, okay, is big profit with small loss. And a lot of people say this is the holy grail. Okay, so people who are in this quadrant, they hold on stocks with strong momentum only. Okay, and then they cut losses very fast. Okay, they cut losses very fast. So you have to be sharp in your entries as well. Okay, so in people who are in this quadrant, lower win rate does not quickly turn them into unprofitable. Okay, so for example, if you have a risk reward ratio of 1 to 5, okay, then you can be wrong 5 times before you are back to square one. Okay, so your trading frequency also need not to be high. It depends on whether you are, trading trend following stocks or trading, certain type of swing traders or even day traders. They can also hold the profit slightly longer, okay, than usual traders. Okay, so they get a very great risk reward, put in this way. Okay, so big wins during the market bull run, okay, will boost the portfolio return significantly. Okay, it is just like if you are in this kind of quadrant, one bull run, okay, will really bring you to the next level. Okay, it's like you see people who really know how to hold stocks, and when the stock goes to very high, they earn like 10 Rs, 20 Rs. The glove back in 2020, the tag back in 2020. When the bull runs comes, you really get those 10 Rs straight, 20 Rs straight. But of course, during normal market situation, you get like maybe 2 Rs. Okay, that would be very good already. Okay, so most professional traders, fund managers, they are in this quadrant. Okay, just to let you know, fund managers don't scout the market. Okay, you don't see, even you look at George Soros. Okay, he don't do scalping. Okay, he doesn't do scalping. Okay, so that's the thing that we have to know. Okay, ultimately the thing that decides whether you are in this quadrant or not is actually your risk to reward ratio. And then I really want to illustrate this. Okay, why knowing your behavior and understanding risk are important. Okay, some people, when they see profit, they are very nervous. Okay, they are very nervous. They will tend to take small profit. This is most retail investors. Okay, first is being they don't know how fast, they don't know how to manage it. Second is because they hardly see any profit in their journey. Okay, every time red, suddenly one stock is in green in the portfolio, they will have the fear of losing that profit. So that's why they take profit quickly and then they hold on big losses. Okay, because a lot of people tell them, as long as you don't sell, you don't make the loss yet. Okay, which is ajaran sesat lah, this one. Okay, it's not true. Okay, so that's why we have to understand, you have to understand your own behavior. Okay, do you tend to be more risk adverse when you are in profit or in loss? Okay, do you tend to hold on more profits or loss? Okay, and this, okay, by knowing this, okay, it makes you understand your shortfalls before they lead you into emotional hiccups. Okay, so as traders, as investors, we need to understand our own emotion. Okay, do I feel good or bad if I were to take profit at this level? Okay, do I feel good or bad if this happens? Okay, so understanding risk would put you into a better position when you want to take corrective action, meaning that I know that there's something wrong. I need to take some corrective measures or actions before I suffer some emotional hiccups. Okay, so next is we take one action at a time. Okay, we take one action at a time. You either improve your win rate or you improve your risk reward. So this one, it is back to the risk metrics that I covered in the last week's seminar. Okay, last week's seminar. Not last week, the last session. Okay, the previous session. So I will go through a little bit later, no worries, but you got to understand what's risk metrics is basically your risk per trade, your risk reward ratio, okay, and your winning rate. Okay, so once you find the sweet spot for yourself and start seeing consistency, then you can scale your portfolio up, okay, with proper position size. So there's a relationship between risk reward ratio and winning rate. So you can see your chart on the right, okay, that's the relationship between your rate of winning and risk reward ratio. So let's look at the 1-to-1 risk reward ratio. You need 50% to break even. So in order to fall in the green side, okay, you need to have high win rate, like more than 50%, then only you are profitable. Now, if you have a 2-to-1 risk reward ratio, meaning that your win is only half of your risk, okay, your win is half of your loss, then you need more than 66% win rate, which I think is a little bit not realistic. But if you have 1-to-2 risk reward ratio, then you only need to be correct 1/3 of the time, then you will be at a break even. So if you have 40% win rate, then you're already profitable. Okay. So the better the risk reward ratio, the lower the rate of winning required in order to stay profitable. Now, the bare minimum, in my opinion, is 1 to 1.5. Okay, with this, you need 40% win rate to break even. So if you are 45, 50% win rate, 60% win rate, then you are profitable. Okay, and traders should always work on these two metrics. Okay, that's why I said one step at a time. Either you take care of, you increase your win rate, or you try to improve your risk reward ratio. Okay, once you find a good spot that correlates, okay, that works well with your strategy, then only you start scaling up your portfolio by increase the number, the R number. Okay, so improve and scale out your profitability. So this one would go back, okay, would go back to the triangle that I show you last during the last webinar. Okay, so how does that look like? Okay, so let me draw. This is your risk per trade. Okay, this is your risk per trade. This is your winning rate. Okay, and this is your risk reward ratio. Okay, so let's say your winning rate is 40%. Okay, every time, okay, every time when you have a win, it is on average 2 times of what you risk, and you are risking 1% risk per trade. What does that mean? It means that, let's say, out of 10 trades that you make, 6 will make money, 4 will make loss. The 4 that make loss will lose 1%. The 6 that, sorry, terbalik. Wait. Sorry, 40% win rate. 40% win rate means out of 10 stocks, let's say you take 10 trades, okay? Out of 10 trades, 4 will make money, 6 will make loss. So out of the 6 stocks that you lose 1% of your portfolio. And the 4 that make money will make 2% because you risk 1% to make 2%. You risk 1 to make 2. Okay, so you have 8 minus 6, 2. So your expectancy is 0.2%. Okay, that's how you get this number. Okay, so for every 10 trades you make, your portfolio will gain 2%. This is the calculation. Okay, this is the calculation. So let's make this a baseline for now for you to compare. Okay, next one. When you compare these two, you only improve one thing. That one thing is risk-reward ratio. Okay, is risk-reward ratio. The rest remains the same. So you take 10 trades right now, same, 4 make money, 6 make loss. Those that make losses, you lose 1%. But those that make money, you make 2.5% right now. Okay, so total win is 10% minus 6. So right now, for every 10 trades that you make, your portfolio will gain 4%. Now, your portfolio return basically doubled from the first scenario. But do you actually double the profit that you take? Put it this way, do you actually double the profit that you take? The answer is no. Okay, from the risk reward of 2, okay, to 2.5 is really not a lot. It's not day and night different. So for example, if you buy a stock, okay, if you buy a stock at let's say $1, okay, at $10, okay, and your stop loss is 9. Your stop loss is 9. And 1 to 2 risk reward ratio will mean that you take profit at 12. Okay, you take profit at 12. Now 1 to 2.5, you take profit at 12.5. Is another 50 cents more. And you realize that a lot of time when you take profit, it still go up higher. All right. So that's the thing, because of trend, which I'll explain later. So therefore, okay, by just increasing and squeezing a little bit more profits from your existing trade, doubled your portfolio return. Okay, this is also something that a lot of people with no risk management in mind, they don't understand. How can you just, improve risk reward by a little bit, then suddenly your portfolio return double? Okay, so that's the very important thing that we all need to know. Okay, so you improve the risk reward, will have double the return. Now this one, okay, this one is same 2.5. Okay, 1 to 2.5, but you improve the win rate to 50%. So out of 10 trades, 5 make money, 5 make loss. The one that lost, you lose 1%. The one that you win, okay, you earn 2.5%. So again, 2.5 is 12.5 minus 5. So you get 7.5, meaning that every 10 trades you take, your portfolio will go up by 7.5% and improve our winning rate from 40 to 50. Sometimes, okay, if you're an experienced trader, you got a bit experience in the market, you will know what I'm talking about. Sometimes improving your winning rate is as easy as taking less stupid trades. Okay, so we all know lah. Okay, when that thing is not really that good, okay, you still want to take the trade, then end up become stop loss. All right, so okay, so the thing that I want to say is you can take corrective action one step at a time. You don't have to you don't have to be very ambitious to do everything at once. Okay, you can take corrective action one step at a time. So if you are in small profit, big loss, which is the red quadrant, you either learn how to cut loss quicker than let profit run. So my suggestion is you learn how to cut losses quicker first. Okay, you limit your loss first. Okay, then you learn how to let profit run. These two will increase your risk reward ratio. Okay, now the next is small profit, small loss. If you want to improve a little bit, so for example, if you're a day trader, you're a scalper, you try to, let your profit run a little bit more. Okay. So for example, if you always like to, some people they have this strategy. If they trade a 50-cent stocks, okay, if it drops to 47 cents, they cut loss. If it goes to 53 cents, then they take profit. Now, can you take at 53.5 or 54, or at 53 you take 70%, you close 70% of your position, and you let the rest, the 30%, let's say you have 10 lots, you take profit for 7 lots first. Then the other 3 lots, you try to take, 1 or 2 cents more, something like that. Okay, you take small steps at one time. Okay, now big profit, big loss, of course, you're going to learn how to reduce and limit your loss faster. And after all this, then we work on winning rate. Okay, we work on winning rate. So now I want to, because every time I mention this, then a lot of people will say, what is the strategy that can make you, okay, can give you like high profit, okay, but limited or small stop losses level? Okay, so there is actually one strategy that I employ. Okay, one strategy that I employ, and that strategy is called trend following. So basically, in a nutshell, you follow the trend. Okay, so when you follow the trend, you're following the smart money, especially in the stock market. So the core belief of trend following is that the trend is more likely to continue than reverse. Okay, it's more likely to continue than reverse. So an uptrend has a higher probability to go up, and a downtrend has a higher probability to go down. That's in a nutshell. And trend traders or trend followers will look into going long in an uptrend or going short in a downtrend. But of course, we are talking about stocks right now, and I don't encourage people to do IDSS. Okay, so I would say focus on uptrend. Okay, focus on the uptrend. So this is a very famous, okay, legend trend follower that I follow. Okay, so this guy, okay, his name is called Ed Sakota. So Ed Sakota, okay, Ed Sakota, his track record is really great trading futures. Okay, so and occasionally stocks are mainly futures. So a lot of hedge fund managers, they're mainly trade futures. So he has a track record of 60% on average yearly return net of fees. Okay, over the 3-decade span. Okay, and first featured in a book, okay, called Market Wizard. His return is really great, okay, better than Warren Buffett, George Soros, and William O'Neill, and all the big names. Okay, it's really comparable. So trading as a trend follower, so Ed Sakota only look at daily chart after the market is closed. Okay, and he has a record of turning 5,000 into 15 million over 12-year period. Okay, and he actually used trend following, and his method is highly influenced by another legendary trend follower called Richard Donchen. So if you have a little bit of research or understanding, or you know a bit about trend trading and things like that, Richard Donchen is the father of trend following. And there is one indicator called Donchen channel. Okay, it's named after Richard Donchen. Okay, so this is the the legendary trend trader or trend following guy. So here are the 5 most cherished trading rules for Ed Sakota. Okay, and you just follow these 5 rules, okay, and your trading can improve a lot, especially if you're in trading. The first is you cut losses. Okay, got lost, have to cut. Okay, before the loss become bigger. Okay, if you have lost and then you wait until the loss to go back to break even, then you sell, you cut, that's not trading. Okay, that is not trading. That is what we call hope analysis or hoping technique. Okay, you pray all the gods and then hope that you can, you know, cut with smaller loss later or break even or even make a little bit money. Okay, this is no, not good. Okay, technique harapan, this one. Okay, so second is write winners. So when you have winners, okay, when you have winners, learn how to write them, okay, by using what I would like to call is trailing stops. Okay, this strategy, trailing stops, okay, is a good way to write winners. Now, third one is keep your bets small, meaning that you start with a very small position. Once you are making money already, then you slowly scale in a little bit more. Okay, scale in a little bit more. Now, the rule number 4 is follow the rules without any question. Okay, but also know when to break the rules. Now, Ed Sakota has a lot of legendary trades last time. Okay, the recent one that I could remember is actually silver. Okay, like about a decade ago, silver is all the way down. So it's like every day when it is going down, he will add like 5,000 more lots into his portfolio. Okay, going short. So this is Ed Sakota's, his own rules. Okay, sometimes when there's one thing in the market that obviously is having a trend, okay, he will scale in, in a very aggressive manner. Okay, but following the trend. Okay, so in the stock market, we can also see the same thing. We can see the rise and fall of a trend. So during COVID, okay, glove stock, okay, gets the limelight. Okay, it grew. This one is top glove, grow all the way up to about 30 over ringgit. Okay, it went up by 516% in just less than half year. And then after the bonus issue, you can see that basically the stock is losing, okay, more than 70-80% of its price value. Okay, now we see all these things over and over and over again. So when a trend is not there, we have to dump the shares. Okay, unfortunately. Okay, don't build relationship with your stocks. Okay, don't build relationship with your stocks. Okay, when the stock is not good, don't fall in love with it. Okay, you are not dating with your stock. So when it becomes a rotten apple in your portfolio, dump it. Okay, so here are the general rules, okay, to trend follow and position trade. So here are the rules I look for, okay, when I want to get into certain stocks. The first one is I pick stocks that are in an uptrend only. My own practice is if the stock is in an all-time high, I'll pick it. Else, I will find it is 52 weeks high. Or if not, at least 3 months high. Okay. Then I'll watch for any temporary pullback or correction to any support level. Okay, any support level. It can be a trend line, it can be a price level support, it can be dynamic support, which is your moving averages. Okay, and you plot an entry when there's a rebound from that level, meaning that the price actually react to that level, or you see a price action showing you that the potential trend resume. And you set a stop loss below the short-term support of 10%. Okay, or 10%. So this is how you can follow trend in a nutshell. Okay, and how you find some ideas. So let me just show you a little bit. So this is one of the Malaysia stocks. Okay, Malaysia stock. So sometimes a lot of people say, okay, this one is the main thing that they see. When the stock go up, they say, yeah, I missed the boat already. Then they give up. But no worries, okay? No worries on that, because you got to understand, trading stocks is not like, scalping or whatever thing. Okay, it's not like that. So you can still, okay, wait, okay, until it here, dynamic support, rebound. Then you buy when there's a rebound, then you set a stop loss below. Okay. Now when it goes up, you see here is also a dynamic support. Okay, here is a breakout from counter trend line. Okay, you can buy here, you set a stop loss down here. All right. So a lot more examples you can find in the stock market. Okay, so for example, this one, uptrend stocks as well. This is Air Asia X. So how can you find, trading ideas. The first thing, of course, you have to get uptrend stocks first. Okay, like for example, when Asia shot up like this, Asia X shot up like this, you don't chase. You wait. You wait for a correction. Boom, price action. Then you enter. Okay, then it goes up. Okay, second time here, you can buy. Go up, come down. You take some profit here. Here, take another. Okay, then it goes into correction. Then here, breakout again. Okay, break counter trend line. So here is where you can start re-entering the stock. Okay, so you need to be very patient of, when it comes to finding entries. Okay, sometimes if the stock shot up like this, very high, wait. Okay, don't chase unless you know what you're doing. Okay, but a lot of time the trend is going to continue unless the stock go up, then come down. That one cannot. Okay, so if it is something like this, okay, one pump sideways, but the trend did not break. Okay, it is not going down. Then you see here it's slowly going up again. You can also plot entry based on the break of the high. Okay, now another one is I have for you is YTL. Now, of course, YTL recently get into some kind of consolidation. Okay, let me just show you. Okay, so here is where you need to be a bit careful on YTL. Okay, so again, you just follow the trend. Okay, and then here it start breaking itself, create lower low, and also you can use some kind of indicator to help you. So you can see now the price pulls back to the EMA 20. So EMA 20 is an important support. Okay, it's an important support. Why? Because you see in the past it reacts to these EMAs. Okay, it reacts. Okay, it did not break below. It reacts. Okay, it closed below, the next day go up. So here you know that it's going to be crucial area. If tomorrow it goes down again, you cannot hold this stock anymore. Okay, then you wait until it climbs back up to above EMA 20 again. Okay, let's look at US stocks. Okay, Eli Lilly. Okay, so again, same thing. You gotta find uptrend. Find uptrend, then you find opportunity. But now, of course, if you're not in this stock, the stock already, shot up a lot. Okay, shot up a lot. So, of course, this one you cannot enter. Okay, because it is too high. Let's look at other one like General Electric. This is US. So you can see in the past, it really gives you a lot of opportunity to enter. You can enter, rebound here, rebound here. This one not good one, but this one rebound here, rebound here, rebound here, rebound here, rebound here, rebound here. Then here it breaks below the 20, but it did not close below the 50. So you need to be very careful. Is because in the past it reacts to EMA 20, which is the orange line, but right now it challenged one step lower. Okay, it challenged one step lower. So you need to be very careful because it is losing a little bit of the momentum. Okay, it's losing a little bit of the momentum. What else? Let's say recently I was looking at this stock called Uber. Okay, so you see that it has a correction, then it shot up already. Okay, so for those who see chart pattern, you can tell me this one's like cup and handle, something like that. Okay, so as long as it regains certain kind of what we call regain certain type of momentum, you can always watch the stock. Now, basic support and resistance still works very well. So you can see that right over here, it forms a resistance here, and then it resistance here, and then it has a breakout. Okay, and it come back down to retest this resistance as a support. Okay, and it coincides, it has confluence with your EMA 20, and then it just drive. It just go up like that. Okay, so again here, if it breaks the high, definitely this stock is going to go a lot higher. Okay, but of course right now it is not a smart place to enter because you're too far away from support. Because if you were to enter the stock right now, okay, that's why I said don't chase the entry. If you enter the stock right now, you set a stop loss below the previous swing low. We're talking about like 9% stop loss, which is not too bad, still within the 10%. But judging at the past 3 days, it has been shooting up, gapping up. I would say based on my experience, it's not really a wise move. Okay, a wise move to sort of like enter lah. Okay, so that would be all. Okay, that would be all for tonight. Okay, the session. The next session is going to be a lot more, I would say, interesting for most people here. Okay, because we are going to talk about more about strategy. Okay, more about strategy. So tonight is basically just something that clear your mind. Okay, why do I say clear your mind? Is because it is a blind spot that a lot of people don't get to understand when they get into a stock market, and then they just keep making mistake over mistake over mistakes, but they don't know why they are losing money in the market. Okay, why they are not making, okay, doing well in the market. All right, so but one thing I can sort of like sum up a little bit for you is Malaysia right now, the market is a little bit weak. Not that you don't have opportunity, but you don't have enough good opportunity. So I would say you need a little bit patience. Okay, study a little bit trend, and a lot of time Malaysia stock right now. Okay, the trend is like a little bit, to me I don't like to say this, but it's a little bit like goreng trend. Okay, stock only go up because there are people speculate it, and it doesn't have nice and smooth uptrend things like that. Okay, meaning that sometimes you hold a stock, okay, it can be a little bit choppier than what at least what I would okay prefer. All right, so it becomes like very hard to handle. Okay, very hard to handle. So you can also probably watch stocks that are uptrend. Okay, again, focus on stocks that are uptrend, and when they break certain high, okay, then you can trade based on the breakout. But again, one thing that I want to share with you, the perfect stocks to me is it is uptrend, trading at all-time high or yearly high, okay, and then it is uptrend, and then I want it to pull back to EMA 20. Okay, and then it do a reaction to reject here, then I will like it. I'll be very happy to enter because I have the best risk reward. Now, an example will be here. You see the stock come down, right over here, come down, EMA 20, go up. And then this level is also a resistance becomes support. Okay, so this is a very good place to enter. Okay, a very good place to enter at this price action. At this price action. So that would be the best that I like. Okay, so you can probably see, okay, if you trade the trend, you follow the trend, okay, one trade is going to give you a very high RR, okay, and then over time your risk reward can be a lot better. So sometimes when it comes to stock trading, you don't have to take trades like every week. Okay, I don't place trades every week. Okay, that's not that's not stock trading to me. Okay, a lot of time I wait until a good trend form, and I wait until I can potentially buy at the right price. Okay, potentially buy at the right price. All right, so that would be all for today. Okay, that will be all for today, and let me pass the time back to
Okay. Yeah.
Abigail. Okay.
Yeah.
Wait. All right. Okay. Any
Okay.
questions?
Yeah.
You can type in.
Yeah, thanks, Jeen Hao, for your sharing. Yeah, I think it was a great session on understanding the behaviors of traders in the markets, lah, and also, you keep emphasizing on the importance of risk reward ratio and also the winning rate. So of course, we want to aim big profits and also small loss. And now we'll go into our Q&A session. So yeah, so for the audience, if you have any questions, you can type into the question box. So let me check. Yeah. Yeah, so we do have some questions. Okay, so the first one here is what time frame can I use for swing or day trading, and how to find out which one to use?
Okay, so for stocks, I only use daily most of the time, daily and weekly. I don't day trade stocks per se. Okay, so daily is the one that will filter out most noise. Yeah, daily is the one that will filter out most noise. Yep.
All right, so yeah, that's better to look at the day chart. Okay. Then next one is what is a good percentage to trail stop loss for day trading, also swing trading? Yeah.
Okay, trailing stop loss to me, I trail based on the swing highs and low. Now let me give you an example. Okay, let me give you an example. So let's say if okay, let's say YTL. Okay, so how you trail? There are a few ways to trail. First, you trail based on EMAs. Okay, as long as it didn't close below the EMAs, you don't sell. Okay, you don't sell. Another one is you trail based on swings. So trail based on swings, it can be, this is a swing. So when the stock is here, you place your stop loss below here. Okay, when it goes up, you trail. When it goes up, come down, you trail. Okay, when it only rebound, when it rebound and break the high itself, then you trail it to the previous low. Okay, like right now, it break out, come back down, then break out, then you trail the low to here. You trail the low to here. Okay, now it's actually it comes down, but it did not break itself high. So technically you don't trail, but okay, there's a big but here. If the stock is going up very steep, okay, you can trail based on candle. So for example, here it shot up. Okay, you can mark a candle here. Tomorrow, if it breaks below this level, you're gonna sell. Okay, below this candle, you're gonna sell. The next day, it didn't. So what you can do is you move your stop upward. If it breaks, you sell. Still nothing happened. Then it depends whether or not you want to trail higher. If it breaks, you sell. So you can take profit for YTL at 155. Okay, at 155. So what price you buy, I don't know, but this is one of the ways to trail stocks that have, you know, crazy movement, especially in Malaysia. Okay, especially in Malaysia. So first, you trail based on the swings. Second, you can trail based on candle. Granted that the movement, okay, not movement, the trail based on candle, granted the movement is big. Okay, is big. So that is the thing that I can share with you. Okay, like in the event of, let's say, like this. If your stock go up like this every day, okay, you just trail. Okay, you trail. You can trail based on 1 day low, or you can trail based on 3 day low. My personal practice is 3 day low. Okay, it's 3 day low. Only when the stock extends like more than 20% away from the EMA 20. This is what I call when the stock is overly extended. Okay, then I will trail based on 3-bar reversal. But some people, they can accept 1-bar reversal as well. Okay, so yeah, that's the thing. Okay, hope that helps.
Yep, I think that answers his question very well. All right, so we have another question here. Is that is there any good indicators for intraday trading? So, or
Okay,
maybe swing trading. Yeah.
yeah. Intraday trading, I don't think stock is a good one. To be honest, okay, to be honest, intraday trading stock is not a good one. The reason is very simple. Okay, volume can dries up when you want to sell them. It can dries up, or when the volume or liquidity come back, then it fills you at a bad price. Okay, to be honest, if you want to if you want to trade intraday, I suggest you to trade futures because you have abundance of volumes, okay, and you get some leverage by trading futures. Okay, you can trade FCPO. FCPO is the best futures that I like to trade in Malaysia. Okay, our FCPO is very good lah. Okay, if you want to know more, you can also ask Tim or Philip, because Philip is a one-stop solution. You can trade stocks with them. You can trade CFDs with them, Malaysia, US, and you can also trade futures with them. Okay, so in my opinion, it's not a good one. Second, if you are doing intraday trading, you need to understand price action more. Okay, indicators, they are often lagging. Okay, so it is not really a suitable thing for to use. It's not a suitable thinking, okay, to expect that there is one indicator that can help you in day trading, because things move fast, and understand that indicators are a mathematical results of past data. So everything you see is late. So for day trading or intraday, you have to go into, like 1 hour chart to find the support and resistance and see price action. Okay, you have to do price action trading. Okay, so some people will also use other strategies like Fibonacci's and things like that, which I personally don't use Fibonacci's, so couldn't comment on that. But as far as intraday is concerned, I don't really use indicator for intraday. Okay, and I don't trade stocks for intraday. All right, so for stocks, it's more like a passively, growing kind of instrument. All right. Okay. Yep.
All right. Yeah.
That's my comment on
So
that.
right. So yeah, just now as per Jeen Hao, like he mentioned, right, we also offer futures. So if you're interested in like indexes, right, or CPO, the commodities are CPO, gold, silver, oil, right, or if indexes like the FKLI or US indexes or other Asian indexes, yeah, we do provide that as well. So if you're interested, you can drop us a text in the comment there, and then we can get back to you again. All right. So yeah, I think there is one last question here. So how to know when to stop loss or take profit? Is there like a minimum point? This is, I think, more for trading lah, instead of
Okay.
investing for the long.
So same logic. For trading, okay, for trading, I use the swing lows. Okay, I use swing low for the guide. Okay, so for example, let's say not asking you to buy. When I look at YTL power, this one is the last one. Okay. Okay. So when you look at this, okay, so for example, if let's say I want to buy this stock, okay, I want to buy, let's say I want to buy, okay, for example, if you happen to buy here, okay, so because it goes down and then it rebound, okay, what is a swing low? Swing low is this, okay, the lowest point of the previous swing. This is swing low. So this is the reference. Okay, so you have to put your stop loss below the swing low. Okay, below the swing low. So for 1 ringgit stocks, I'll say you just put like 3 to 5 cents below the swing low. Okay, sometimes not. Okay, or you can just put like I think 3 cents is fine for $1 stocks. 1 ringgit stocks for 50 cents one, usually I put like 1 to 2 cents, and I don't really like to trade stocks that that is priced below 50 cents. I usually prefer stocks that are priced in between 2 to 5 in Malaysia. Okay, so I'll put like 10 cents below previous low, something like that. Okay, so this is how you put your stop loss. Okay, because we want the structure to fail, because uptrend is something like this. Okay, higher high, higher low, higher high, higher low. Why do we put the stop loss below the previous low? Is because once it breaks, it means that this might be a downtrend. Okay, this might be a downtrend. So you need to be very, this is market structure. So for example, for YTL power, okay, it is not felt yet because the structure is here. Okay, so this one, if you're aggressive, you can still keep holding. Now, some people will also use the EMA 20 as a reference. Okay, EMA 20 as a reference. So this one depends on how long you usually hold a trade. Okay, how long you actually hold a trade. All right. Okay, I think that's what I can share with you.
All right, yeah, I think that answers the question as well. So I think that is all for the Q&A session. All right, so maybe I'll just share my screen.
Okay, you take over.
Yeah. Okay, so you can see this screen, right? That's right. So yeah, if you had enjoyed this session, so be sure to register for this upcoming session on kickstarting your stock trading journey with trend following, which Jeen Hao was mentioning earlier. So he will definitely spill a lot more strategies and also insights on how you can trade with the trend, right? So yeah, in this session, he will further expound right on harnessing the power of the trend-based trading, how you can analyze and also follow the trending sectors and create a solid trading plan with the 4-step TEST process. So if you want to learn more, make sure you register and join us for this last session in this series. And you can scan the QR code to secure your seat. It will be on the 18th of October next month. So yeah, we will look forward to this session. And right, before you go, I have just a last bit of info for you as well. So if you guys are keen to connect with us, you can find us on these platforms. So you can search Philip Capital St. John Berhad on our Facebook, YouTube, Telegram, Instagram. So we post a lot of updates and events there, as well as our promotions, market news, and also updates. So yeah, do follow us if you haven't. All right, so then you will not miss out on any updates that we will have coming up. So we also record our videos and it will be uploaded on our YouTube channel, so you can check them out as well. Okay, so yeah, lastly, this is our branch, Kuching branch contact for you to reach out. All right, so you can just drop an email if you have any inquiry or drop by our branch to have a chat or like to know more about investing. So we welcome you anytime. All right. So yeah, that is all for our webinar tonight. So appreciate everyone for joining us, and also thank you, Jeen Hao, for your time and also sharing. Is there any last things you want to share, Jeen Hao?
Join the next session.
Yes, exactly. Yeah. So yeah, we will
I
also
think a lot of
some.
people, a lot of people will be more, excited about the next one. Yeah, because it's all about strategies.
Yeah, and also I think more on the technicals, right?
Yeah, more on the technical side, and it's more about strategies. So yeah, a lot of people will find it more helpful. Okay, because a lot of people they are more obsessed with strategy. I'll put it this way.
Yeah, so you all heard it. So make sure you all register for the event on the 18th of October. All right, so we will see you guys there on the next webinar, which is the last webinar series as well. So yeah, thank you again, everybody. And thanks again, Jeen Hao. Hope to see you very soon.
Thanks.
All right.
See you soon.
Night.
All right. Thank you. Bye. Bye, everyone.